Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at forex trading on silver, euro dollar, dollar Swiss, the NASDAQ, and gold. Just a reminder that these videos are intended as educational. We are only observing current market conditions, and these are not to be considered as trading advice. In general, we see a bearish trend lasting 2 months now, but price action is consolidating into a symmetrical pennant. Gold surged to an all-time high on January 29th, breaking past $5,500 an ounce, driven by escalating Middle East tensions, expectations that the Fed would keep interest rates on hold, and widespread concerns about U.S. debt and the stability of the dollar. This type of volatility almost always gives us an opportunity when the panic subsides, and we can trade in the opposite direction for a couple of days. This peak here was caused by the first attack on Iran by the U.S., and we had the same opportunity over and over again. Typically throughout history, as war rages on, investors become less and less worried about it, never so much as the initial shock. The safe haven requirement for gold for investors is obviously diminishing, as we can see by the NASDAQ, which again has reached all-time highs based on the frenzy of AI and tech stocks. But watch out for the news this week. Both gold and the NASDAQ may be affected by the news this week, with the ADP Employment Change, a PMI, and the biggest event of the month, the U.S. non-farm payrolls. As we saw with gold, the U.S. dollar is stronger as of yesterday. This was caused by at least 3 factors. Firstly, the U.S. ISM manufacturing PMI was higher than expected, which signals that the Fed might hold off on interest rate cuts for a while. In the same breath, U.S. bond yields are on the rise again, bolstering the U.S. dollar. And tensions are rising again between the U.S. and Iran, which is a clear geopolitical risk, feeding inflation fears. If we look at specific U.S. dollar major pairs like dollar Swiss, we see the stochastic oscillator overbought and turning down in the downtrend. We see the corresponding price action in the opposite direction, where the U.S. dollar is the quote currency. Price action on euro dollar has reached the lower trend line, with the stochastic oscillator turning up. We can see where the stochastic oscillator has picked up tops and bottoms in price action repeatedly. I encourage you to check other US dollar pairs on all time frames for the opportunities, but watch out for the economic news this week. We will do a recap on Thursday's video ahead of Friday's NFPs. Getting back to precious metals, we see a similar picture to gold on silver, which is also affected by the US dollar. Price action on XAGUSD is also in a symmetrical pennant on the daily chart. If we consider a bearish bias, take a look at lower time frames like the 1 hour, where we will be watching the upward trend line and our technicals. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.